Hi everyone, hope you're doing well. Welcome to a different but interesting video that we're going to do today. We're actually going to go and I'll say watch, but I don't know if I am going to click play on this video because I watched it back and I thought, no, this is too cringy, this one. I looked back and I thought, wow, there was a lot of stuttering, a lot of pausing going on. But yeah, we were going to go back to my first ever video on YouTube, which has just turned 8 years ago since I posted my first video on YouTube, which was near the start of my investing journey. I started investing a little bit before it, and then I thought, you know what, I'm also going to document my progress in the stock market. That's why I originally started the stock market. The YouTube side of it was just to kind of go, this is kind of my research. Here you go. If you enjoy it, hopefully it's useful, and maybe there's some new points in there that you didn't realize when you searching a company that I own. Since then, obviously, it's developed into a lot more other things since then. But yeah, we're going to go back to this video that is now 8 years old, which is my 8 stocks June to July. So we're going to look at my first video and also some of my first stock picks and see how they did. Like I said, I'm not going to play the video because if I do click play, we're not watching that. so yeah, we're gonna get onto these picks. Yeah, so originally this is on the old YouTube channel. I don't know if any of you guys were watching the videos when we were on the old channel. Long story. I've never really told this story. Well, I have told it before, but it was like 5 years ago since I last said this. So I actually used to have another channel, and what happened is I was doing YouTube for a good 2 or 3 years and never got paid anything for it. Just did it because I enjoyed it. And then the COVID happened, and so many people were just around looking for how to invest in the stock market, and my videos picked up quite a bit of a attraction then. And I actually had the ability where I was getting that many views, that many subscribers. I could have actually got paid for making my videos. Now the problem is that this old channel that I had, it was restricted. I could not monetize it. I think what it was is basically 10-15 years ago, I used the same channel for recording like a couple of clips that were on like I think it might be on the PlayStation at the time, and because of copyright or maybe some music thing that I posted, stupid things you do when you 13, 14 years old. Yeah, I ended up getting copyright strikes, and because of that I wasn't able to monetize my channel. So my only way around was to make a new one. So I made a new one. Now the really frustrating thing is that after I made the new YouTube channel, YouTube actually, Google emailed me and said, oh, you were restricted on your old channel. Actually, we've removed them. And I was like, no. I said, I've just moved YouTube channels and now you took the restrictions off the old one. I was like, come on. So yeah, I guess I could have stuck around, but who knew they would, I was trying for like good 3 or 4 years to get them removed as well, and then all of a sudden it would be after I moved YouTube channels. It was literally like 2 weeks afterwards as well. I couldn't believe it. So yeah, a bit frustrating. But yeah, we're gonna go through these stocks here. When I started making these videos on these stocks, is like there wasn't actually, when I was back in 2017 and I was posting this stuff, the YouTube scene was nowhere near what it was like today. Like there's obviously so many stock market content creators out there. I really think I was the first UK investor to post about stocks on the stock market back then. And even on in general, there wasn't hardly any stock market content on YouTube back then. And all this kind of research that I did was kind of on my own, looking at web browsers, researching things on websites. And unfortunately, well, I don't know if it's unfortunate, most of these stocks I did go on to sell not too long later. The reason why is because when I started investing back in this time period, the reason why is I kind of got 2 or 3 years into working a full-time job for the first time. I was like 21 at the time when I was making these videos here, and maybe even older actually, 22, maybe 23. Yeah, and I got paid my first time money for first full-time job really, and that's when I started investing, and I was looking for things to put money in and get this money that I earned from working a job to go earn me more money. And I invested in these companies that I'm about to show you. And what happened is in general 2017 was actually a really good year for the stock market, and 2018 wasn't too bad for the majority. But I made a lot of money very quickly, and I was like, what do I do here? Do I just sell? Do I carry on holding? And because there wasn't really that much education around at the time, I was kind of like seeing all these stocks going up, and I was seeing all my money go up by a lot, and I was like, I'm going to sell them. And today you'll look at a few and you'll go, you should have held that for long term. And I guess this kind of shows you the benefits of that, holding for not only like 2 or 3 years, but 5 years, 6 years, 7 years, 8 years, 9 years. It, obviously, in the long term can really benefit you. And some of these stocks are prime examples of today where I'm like, maybe I should have held that one a little bit longer. So yeah, one of the first stocks that I owned was a company called 3i Group, which has done quite well since around about when I posted that video in 2017. Recently, a lot of that's to a recent rally, but yeah, up 348%, which was not a bad pick at all. Would have really outperformed the S&P 500. The next one, I don't know how this has happened, but I've actually got timestamps on this video. I didn't do this, so I don't know where this has come from. But MGM, I did start buying a little bit of MGM, and that stock has pretty much stayed stagnant, I would say, since I did buy it. So, well, it's up a little bit. It's up 82%. I shouldn't really say it stayed stagnant, but yeah, being an okay performer. The third stock that was in this video was actually Live Nation. So when I was buying these stocks, I was trying to buy stocks that were quite simple businesses, although a few were not. There's a few kind of curveballs in there, but simple businesses with strong revenue growth, strong profit growth, and decent valuation. And that's kind of where, back then, that's where I was as an investor. Obviously, as we all do, as we keep investing, we learn more things and we get better as investors. And, back then I would say like balance sheets weren't even something that I considered. Share buybacks, capital allocation, dividend yields increasing, shares outstanding, metric expansion, 100 baggers. That was certainly things that didn't come into my philosophy when investing then, but the basics were still there. The likes of the profit and revenue growth and an okay valuation and companies you understand. And Live Nation was one of those where I saw prices of gigs, concerts going up crazy. Most gigs starting to partner with the companies of like Live Nation, for example. The fees that they were taking were going up and more with no regulation. And just in general, like, they would just seem to, going to gigs seems to be getting quite popular because of social media. And yeah, that was $34 at the time of making this video. And yeah, since then, this has been a pretty good performer. If we do have a look here on the stock chart, yeah, up about 314%. So yeah, really, really good, to be fair, on Live Nation. The next one was Ferrari. So I bought Ferrari. This is one that I should have held for quite a long time, because if we do go back to 2017 here around June time, I mean, the stock is up about 500%, a 5-bagger. Yeah, I should have held this a little bit longer with it being such a great brand of Ferrari. But yeah, I remember buying Ferrari because it IPO'd, and the stock initially dropped 20% off its IPO. I was like, God, this is Ferrari. This is one of the strongest brands in the world. And yeah, I bought it and thought, with how the company works with limiting its production and being able to have the demand and bringing out these vehicles, it's going to be around for success for many years. And when you're serving the customers that Ferrari have, you can charge basically whatever you want for a Ferrari. It's got that branding power. And yeah, I bought Ferrari after its bit of a drop after its IPO, and what performer that's been. I remember through the summer of 2017, the stock just continued to go up and up and up and up and up day after day, and it was such a beautiful stock chart. And I remember being up on Ferrari 150%. I don't know when that was. I don't know if it was in 2019 or 18, but I remember being up, about a year after owning it. And I remember being up such a good amount of money, and that was my largest position back then, I believe. And I remember telling a few people at work, saying I bought these shares in Ferrari and I'm up a significant amount here. I said, I don't really know what to do. And I remember, I go back to there was a lack of available and free, nothing like it was today, where people help you get a good mindset on investing. I was thinking, what do I do here? Because when you own a stock like this and you're up, do you just continue holding, or are you supposed to sell? What are you supposed to do? And I remember I was up and I thought, that was the first stock I ever made really good money on, where I was in the stock market, you can make serious money in this game. And I remember eventually I was like, I'm going to just sell, because I can't believe how much money I'm up. And looking back now, obviously should be one that I just held on to for. I probably should forever stock. I probably should be holding it right now, but these are the stages that you always have to go through when you're learning to be a long-term investor. But yeah, it was a cracking investment, was Ferrari. I really enjoyed that one. Win Resorts, I did buy a bit of Win Resorts. That had a really, really bumpy time, up and down. You can see at one point, I actually sold out my Win Resorts back in 2018 for about, I think it was about 100% return. But it's been really bumpy with all the issues with the CV situation, and what happened at the time is the owner, Steve Wynn, obviously all the issues that he had as well. But yeah, that actually did really well for us. Was Win Resorts. I've owned it twice actually. I owned it the first time round, and then I bought in the COVID dips. I don't know if any of you guys were watching then. One of the stocks that I bought in COVID, and oh, God, I remember that buying that one, and literally within 2 weeks I was up. I can't even remember if it was like a 50 or 100%, but it was in a blink of an eye. Like COVID, there was the crazy moves during that time frame. Next one was a bit of a curveball. Metilinos. This I can't even. I got this online. I read an article online, and I don't know if it was Financial Times. This is one that I wasn't really 100% on. But I read a review on it, and I thought, wow, this sounds really good. What they got going on? Probably the one with the lack of research here, but yeah, I found good information on it, and I thought, you know what, this sounds really good, and checked a few things out, and I bought it, and yeah, I mean, this was a bit of an investment into Europe, and yeah, about an $8 stock, and right now I believe the stock is $46. So yeah, this has gone on to be a 5-bagger, but that is that was a major curveball buying that one. And the last one, probably the most depressing one, Nvidia. And this is $154 pre-split. I bought Nvidia, and I think the reasons behind it was just seeing like the demand for chips, and more chips being needed, and very basic investing philosophy of buying it. And same again, I made good money on it, but if I was to tell you how much I sold it for, it's very depressing compared to if I was to hold it. And yeah, that stock would have ended up being, if I held my shares, wow, on a pre-split, adjusted for splits now, that stock was $154 at the time. On a split basis now, that is $3. I think I'm going to have to stay away from very high bridges for tonight. Yeah, that stock would have been, yeah. So from there, the stock went on to be a 4,178% return. I'm not even going to tell you what I sold that for. To be honest with you, I can't remember. I feel like it was like 70, 80%. Devastating, isn't it? But yeah, 4,000% return. Oof. That is crazy, isn't it? I mean, £100 in there gets you $4,000, and I had more than £100 in there. I can't even. I think it was a bit more. I reckon it would have been towards the £500 to £1,000 I probably had in it at the time. When I started investing, and yeah, wow, that's crazy money, isn't it? But hey, it's not a bad pick, I tell you. To say those were my first picks in the stock market, there's some good picks in there. I'm pretty happy with them. I thought there'd be a few more stinkers, to be fair, but pretty good picks. I mean, most of them gone on to do well, and some have gone exceptionally well. I guess time's in your favour when you are looking back like 8 years. That naturally, if they continue to grow, you'll get rewarded. And I guess that's the benefits of just being a long-term investor. Sometimes it's, when you look at this, maybe it is, the tactic is to just buy and forget. And, sometimes your worst enemy can be being active. If you sit, if you sat on some of these stocks, the mega returns. I mean, I'm sure if we were to work out an average, I would assume that these would have outperformed the S&P 500. Was there one more? I thought there was one. Yeah, was there one more? Square, yes, I knew I had Square. I thought there was one more Square. I've not got that one up. Yeah, I remember buying Square right at the early days. I think I sold that one out at like $55 back in 2018, 2019. That was a really good one for us. I was very close to like a 200% return on that one, and sold out that one as well. I mean, yeah, for the first pick, I reckon if you were to work out the average return of this and compare it to the S&P 500, I'd assume all these picks have outperformed the S&P 500. So yeah, I'm pretty happy with them. Anyway, yeah, sorry, not really much like much information out there on today's video. I just wanted to have a bit of fun really, and something a little bit different. So hopefully you enjoyed it. If you want to go watch the video, then you can go watch it. But I'm certainly not playing it because I can feel myself like sinking down in my chair just listen when we listen to it for the first 3 or 4 seconds. But yeah, hope you enjoyed it, guys. Thanks for watching. See you in a bit.